Hi everyone, welcome back to discuss our Indian equity markets focused weekly magazine Bottomline's current edition for the week 13th May to 17th May. The Indian markets extended their losing streak for the second consecutive week as Nifty index lost around 3.7% in the last 5 trading sessions. The major reason for this fall was a trade tension between the US and China, weak global cues, and subdued results in the major Nifty index counters. The US and China trade tensions had kept the metal sector under pressure. The rising crude oil prices also weighed on the Indian benchmark indices. Now, coming week, the inflation data is expected on the 13th and 14th May. Also, the major counters like HDFC, ITC, Siemens, and Lupin are yet to release their results. Now, this will have some impact on the Indian indices. Looking at the technical part, for the past few weeks, the index has been trading in a range between 11,550 and 11,760. The 11,550 was a last hope for the bulls to keep the momentum going. But last week, this level was broke decisively, and the index saw a sharp selling pressure during the week. Now it lost around 433 points or 3.7% to end the session at 11,279. Now on the downside, the major support is placed in the zone of 11,150 to 11,230. Now we can see a horizontal line and few Fibonacci cluster at this zone. Now looking into the indicators, the RSI indicator, which is a momentum indicator, and the MACD indicator, which is a trend indicator, both are showing weakness on the chart. The volumes were also above average during the week, which suggests selling pressure in the index. The India VIX rose around 10% in the week gone by. It is placed at around 26.34, which is quite high level, which indicates that traders are expecting further high volatility in the Nifty index going forward. The market breadth, like number of stock advancing to number of stock declining, were highly in favor of bears. The stock touching the 52-week low were quite higher than stocks touching the 52-week high. The overall sentiments also remained weak. Looking into the derivative data, the open interest during the week slipped as the Nifty index came lower. This suggests long unwinding in the index. Looking in the option chain, the highest put writing is seen at 11,000 strike price and highest call writing is seen at 12,000 strike price. Now this is quite wide range to take any call. So we dip into the weekly expiry. Now with respect to the 16th May expiry, the PCR stands at 0.60, which indicates that there are more number of call writers as compared to the put writers. The highest open interest in this weekly expiry on the put side was at 11,200, which suggests that this could act as a support if the index slips further lower. On the other hand, 11,500 has the major call writing. If we see any bounce in the index, this could act as a resistance. See, overall technical indicators, derivative, and the sentiment indicators are suggesting that the market structure is quite weak. In the near term, we could expect further correction in the index. So any bounce towards our resistance level of 11,420, where a horizontal line and 50 EMA is placed, could be a good shorting opportunity for the bears. However, the markets have fallen a lot in the week gone by. So if we see markets going by at around 11,200, and if we observe any reversal sign, we could see a good long opportunity at those levels. But the second trade setup could be a risky one, as the momentum on the downside is quite high. In both the cases, we can see 1.9% as a potential reward. Now talking about the Bank Nifty. Now Bank Nifty is expected to trade on a volatile node as well. The next trend in the index will be decided by the results in the banking sector. Last week, ICICI Bank reported a 5% drop in net profit. On the other hand, SBI reported a decent set of numbers backed by a decent management commentary. Looking into the technical part of the Bank Nifty index, The index had been trading in a rising channel for the past few weeks. Now this channel was broken on the downside during the week. The Nifty index slipped at around 900 points with a cut of 3% and ended the weekly session at 29,040. Now the momentum indicators were also trading weak. The RSI and MACD both were trading in the downtrend. This indicates weakness in the counter. The Bollinger Band also expanded as the price slipped lower, and the prices are riding the lower Bollinger Band, which indicates weakness. So the overall trend and indicators suggest that the Bank Nifty index is trading on a weak note. So on the upside, 29,500 to 29,700 is a good resistance zone for the index. We can see channel resistance, a previous swing low and 20 DMA placed in this zone. So any bounce to that level could be a good shorting opportunity for the bears. On the other hand, if the index crosses the Friday's high, we could see some short covering in the index. And as a result, we have provided two trade setups in Bank Nifty as well. So if the index bounces to a resistance level of 29,500 to 29,700, we could short at those level and get a potential reward of 3.72% with a target of 28,500. But for risky traders, you can go long above Friday's high, that is above 29,210, with a stop loss of 29,000 and a target of 29,600. The potential upside in this particular trade setup is 1.34%. Now the stocks that our team is looking for in the coming week is Mahindra and Mahindra. Now the stock has been finding a good support at around 615 level, which is a previous swing low that was registered in the stock. We have seen a good bounce from this level, and if the stock sustain above 615 level, we could also see a double bottom pattern forming in the stock. The RSI and MACD indicators are posting a positive divergence with the price. Also, the derivative data are suggesting a major put writing at 620 and 640 strike prices. So if we see any bounce from this level, and if we see the stock sustaining about 650 level, we could always find a long opportunity with a stop loss of 615 and target of 690, with a potential upside of 8.32% in 1 or 2 months. The next stock that we are looking for is Ultratech Cement. Now, after the stock posted a good result, it rose around 10% in 2 days. Post that, it is in the correction mode. After its result, it broke above its rising channel line and took a high of 4687. Now, the index is correcting towards this channel line. The previous resistance is now acting as a support for the index for Ultratech. Now, if we see the stock coming at around channel support line, and if we see any reversal sign at those level, we could look for long opportunity in the stock. The potential upside could be 12.15% from this support level. Now, next stock we are looking for is State Bank of India. As mentioned earlier, the bank has reported a decent set of numbers with decent management commentary. We have seen a cluster of support level from where the stock had bounced. The horizontal line, the falling channel support line, and the falling trend line support line. All of this acted as a good support for the index. Currently, the index is placed near a strong intermediate resistance zone of 20 DMA and falling channel resistance line. Once the index crosses above this and sustains above this, we could find a long opportunity in the stock. The potential upside that we can see in this stock is 7% in 1 or 2 months. The stop loss of 279 and target of 330. The next stock that we are looking at is Century Textile. The stock has been trading in a broad range of 720 to 945. For the past few weeks, The range has even squeezed between 900 to 945. It is hovering just above its 100 DMA and is trading in this tight range. The 945 is acting as a very good resistance for the stock. The oscillators like RSI and momentum indicators like MACD are showing some chance of reversal. Now, once we see stock sustain above 945, which is a strong resistance level, we could find a long opportunity in the stock with a target of 1050 and potential upside of 11.11% in next 2 to 3 weeks. So that's it from our side. As a standard disclaimer, all the views expressed in this magazine are informative in nature. There is a subscription facility of this magazine at our website sharadmishra.in, and standard terms and conditions, disclosures, disclaimers, and terms of site use are applied for this product. Thank you. Until next time.